Patrick, you say you're finding scalpers amongst the young new traders, and you come across suggestions that MACD is not helpful. I have to tell you that MACD has honestly been one of the best indicators that I have used over the last several years for my preferred strategies. It is not preferred by scalpers amongst the young new traders, absolutely not. Because they're trying to go in and go out, and they're trying to see riches very, very quickly. The MACD is more for a standard, not progression, but you know it's based on those numbers, 12, 36, and the EMA. It's not single day. It's not 0 day to expiration trading. It is looking just like SMA 20, SMA 50, comparing the SMA 20 to SMA 50. We're looking at something that has a strong signal. And I just pulled up the bull put credit spread because this was one of the key factors for my weekly bull puts that I use. 15 to 20% of my portfolio, this is what I use. In this weekly bull put search, in the technicals, I'm looking specifically for a MACD cross signal over 3 days because I tested over 70 different variables crossing years of 2017, 18, 19, after the pandemic, and looked for ones that were under 3 days instead of over 3 days, so on and so forth. And what I found is the combination of stocks in an uptrend. Oh, sorry, Patrick. Stocks in an uptrend over the SMA 20, because I'm looking only for 10 or 14 days out in time. I open these on Monday when they're 10 days to expiration. And looking for a positive MACD cross of 3 days resulted in the probability that I wanted. Meaning the success rate is 86 to 87%, focusing on a probability of 85%. But consistently, that's that. Now I have to manage those, and you've heard me talk about, the full playlist on bull put credit spreads, the 8 ways to manage a bull put credit spread and more. But that was night and day. It really was. Looking for ones that were showing a positive trend where the MACD was over the cross signal by at least 3 days versus under less than 3 days. It was night and day. This met my goals. Looking for those ones that are just showing a breakout did not meet my goals in this particular strategy. Bottom feeding. Looking for ones that had fallen below, that had just fallen down and were showing a MACD bottom that you'd expect to come back up, and doing bull put credit spreads on those stocks was a loss. It was negative. Both of these ones I'm talking about were positive, but this approach was the most positive, using MACD as a trend. I use it for my married puts. I use it for the bull put credit spreads. Let's talk about, for those of you that don't know, let's go to the charts. We're going to go to ACP here, stock charts, ACP on PowerOptions, link from PowerOptions. And we're going to take a look at what the MACD is. And I'm using Spotify. Okay, now, This is still perfect. This is still what I would look for, but I think I want to use a better example. But hey, I came here, and like you said, hey, Mike, you're talking about MACD, so you said you were going to Spotify. Show me what you're talking about. All right. When I want to enter, I was going to draw, but let me go back to here. I want to take this movement out. I want to get rid. There we go. I want to do that. Okay. We're going to look at a chart here. This is your MACD here, down there. It's the MACD 1226 compared to the EMA 9. Okay, those are the numbers I was talking about. Now, when do I want to buy a position on the MACD? Typically, I want to buy in this level. When I see the bottom, when I see the MACD bottom. But for me, I wait for the positive signal, the crossover. It has to be here. Now, someone's going to say, oh, MACD is not reliable. You missed this bottom. You could use candlesticks. You could have bought here. You missed this bottom. But there are many times, not shown on Spotify here, where you hit that bottom and you see a MACD crossover and think, oh, this is a great time to buy. Okay, it was, but it wasn't such a great movement, and then you're dead. What happened shortly after that MACD crossover, that positive MACD crossover, saw the bottom, saw this bottom? It didn't separate. All right, we didn't see the separation. We didn't see a positive separation. It did give you a gain, but then it was a death knell. Now, MACD bottom here. When would I get in? Now, this was an earnings event, so it's a little bit different, but positive crossover there. All right, we see the positive MACD crossover. It's here. Did I miss the moneyness by not buying here on the candlesticks? Of course. But I want to see a positive trend because my positions are not daily. All right, we're not just 1 week out in time. I'm looking for something a little bit more pronounced. Start of me, and you've seen this before with some of my married put discussions, I came up here and MACD crossover of 3 days here. This position here, I could have traded probably 8 or 9. No, that's not that long. No, it is. From April 13th to around July 7th on a 2-week cycle, probably 7 to 8 different bull put credit spreads because the MACD was above. Now, it did cancel here. Yes, it did cancel there, but it was still in the uptrend, so I might not have seen those. But that's the range I want for that strategy. Now it crosses over here. See a negative crossover. That might be a time to do a bear put debit spread. And it looked good. I'm seeing that negative MACD crossover, stock drop below the SMA 20, or EMA 20 in this case. That's giving me 2 signals that we're in a bearish trend. I don't want to be in bull put credit spreads there. I don't want to be in the married put there. Why do I mention married puts? Let's take a look at, I don't want to say AGI, but let's take a look at AGI. Let's go back to Power Options. My homepage. Let's go to AGI. This is a married put that we're in. It's at 47.87. We're at a liquidation value of about 18 or 19% on this position. But it's gone through heck, for lack of a better term. And you guys know that. You guys have all seen the gold and silver and everything along those lines. So as I was in the married put, at one point I did sell a call here in the uptrend. And it was in this uptrend. I apologize. In this uptrend. And I allowed myself to be assigned at 38. And what I did is I sold a put because even though the stock pulled back and had this dip down, the MACD was still positive. So I sold the 40 put against my long put, bought back into the stock, and have ridden these waves up and down. This is a tough one. Why I bring this one up is because I'm agreeing in a way with what they're saying. As much as I just discussed how I use MACD and I live by it. My entry point, by the way, for this position was over here. It was back in June for AGI initially when there was a positive MACD crossover, married put, 200-day out put option against the position, positive MACD cross going above the SMA 20. It hesitated, but what did this allow me to do? This allowed me to sell calls here and lower the risk. And then the boom started. And I did as little as possible. I just sort of let this run, rolled the put up, got to bulletproof status of 8 or 9%, and then the hiccup started. The bubble. Everyone says gold and silver bubble. All right, so we drop down here. What is this? What is this here? This is that MACD bottom I was talking about. And then we break through. We have a MACD crossover, and we're crossing back above the EMA and SMA 20. Roll the put down to this level. What does that mean? It means I had a married put position. We moved up. We were at bulletproof status where guaranteed profit of X%, but it had a pullback. Well, now I can take the profit off that put, move it down to the lower strike. I may increase the risk, but my break even is down here now with the stock trading here. Benefits of the 13 different income methods in the blueprint. Okay. It goes up. And then this here, I get, why would, as you mentioned, a younger trader, impulse trader, day trader, say that MACD is irrelevant, that MACD is not going well, that these younger investors are talking about, is because in this here, they're going to say, oh, well, this is a worthless pattern. You can't see it. It's up and down. It's up and down. This was not related really to Alamos Gold itself. This was related to all of the news on gold and silver, all the economic news, Bitcoin news, dollar versus. So what happened here in this range when everything started to fall down, when everything started to collapse, and then back here too? Well, that's when the dollar was weak. These rises were when the dollar was weak and gold was increasing. And then this little flux here was when the Fed, the U.S. government said that, oh no, the dollar is not weak. We're going to do some new things. We're going to make some changes with Japan's currency rate. We're going to do this and that. And the dollar is going to be strong. That's really what it was. The dollar was going to be strong. And there you go. And now it's going back up. Now this is buoyed by earnings. This particular one is buoyed by earnings. But you see these same patterns. If I just looked at a non-metal stock, well, we're going to. If I just look at a non-metal stock, sorry, Patrick, let me change from my pen to this, and let's look at NVIDIA. We've got earnings coming up, and I'm not saying that this is going to give you any insight into the earnings or anything along those lines. When would I look to buy or sell NVIDIA? I would look to buy NVIDIA, honestly, personally, what's worked for me, on those MACD bottoms here before a crossover. Okay, so it worked out a little bit, didn't get the secondary positive confirmation above the SMA 50. That's key. I want that tertiary, the third level commitment, that third level range. And then we drop back down. Then we have this, okay, here. And we have this MACD bottom here. I want that next level of confirmation. So even though I missed it, did I get in here at the best price that they're talking about? Not using MACD. Maybe they're using stochastics. Maybe they're using on option volume, AMD lines, ADX, cumulative distribution, money flow. All right, but what I'm looking at is I want that base, and then I want that confirmation. That's my signal. Okay, so I get in here at 125 instead of 100. I'm kind of okay with that. Now, what's happening? When I see this, if I'm in a married put, if I'm in a bull put credit spread at this point, and I see that MACD crossover where the red starts going over the black, where the signal line, as you mentioned, starts crossing above the MACD line, I'm hesitant. And when I see this, that's usually when I'm tempted to sell, but another bottom. Do the same thing. So now NVIDIA is holding in this range. NVIDIA is really just in this range right now. Some just average earnings, and then this new earnings we're coming up with in, was it the 23rd or the 24th? I can't remember as well. But that's what I look for, and that's what's worked for me. It works for me on the bull put credit spreads. If I don't use that filter and I back test it, my returns are probably 40% less than what they are with using the MACD. If I try to look for that bottom feeding stock where the MACD is bottomed, and I look for that base under 3 days, MACD under 3 days, it's less. It's 25% less. But looking for that pronounced trend, the MACD above the signal line for at least 3 days. And you've heard me mention it, how I use that to manage my married puts, to roll the puts up and down and do that as well. That's what's worked for me in the strategies I use now. 0 data expiration trading, day trading options. I have never touched. I've tried to. I don't have the time, Patrick, honestly, and I don't think I have the patience. Last year, was it, Patrick, 2 years ago? A year and a half ago, remember, we went through that whole week of trying to track, me personally trying to track, paper trade, and trade the 0 data expiration options. And yeah, for the first 3 days, I had successful positions. And then the fourth trade, something happened in the market outside that you couldn't see on the signals that I was using. Maybe they weren't the best signals, of course, Patrick. And I had to roll that daily expiration option out 2.5 weeks. to get a credit, to roll for a credit. So that completely disrupts the trading plan of zero data expiration options. And then 2 days later, I had to roll another one out about 2 weeks. And so now I've got 2 positions 2 weeks out in time to make up for the losses. And I've used most of the small amount of money I had in there that I was trading 3 trades with for zero data expiration. So I had to extend the strike prices in order to get the credit I needed to pay for the buyback cost. And I tried that another week, and the success rate wasn't there for me. Okay, so that's where we ran into a problem. Now, Patrick follows up, and he says he surmises exactly what I was saying, is that in these comments that he's seeing, let's go back to AGI, or we can go CZR. It's been all over the damn place, and it's been in a very drastic downturn. Then it's been come back up from the earnings. But he says they're doing a lot of trading, pattern trading, $1 to $5 per share, 5-minute or less trading periods. Yeah, I can see that. Many of sites are making $100,000 to $500,000 per year, and are giving a lot of hope to the very youngsters that you talk to, that you had at your part-time job. Yeah, that scares me. You know, I never do that. We can see big profits with our long call search, the Bollinger Band breakout. Ernie's made great success with those. He's just above a 50% success rate. Don't get me wrong, because that strategy is doing that. But yeah, those kind of manipulations, those kind of day trade manipulations, I agree. The MACD is not useful for that. I am not doing that. This is why I stay on the MACD for my positions, both the 2-week out trades, even if I did weekly covered calls, the weekly naked puts, picks of the day, that Ernie created that he found worked best, they incorporate the MACD as well. So they're good for those kind of trades. Day trading 10 to 15, 20 trades per day, scalping, it's not a good indicator for that. I don't know what indicators they use. And there are different MACD trends that you can use, the smaller ranges, Patrick, but I don't think, as you mentioned, and I think that they mentioned, they're not accurate. If you try to take that MACD level down to a let's do a value of 3. Okay, so you take it down to a MACD 4 and a MACD 8, let's just say, and a SMA or EMA, excuse me, not 9, but an EMA 2. I don't think that's going to show you the same strength of trend that you'd be using. It has to be for longer term trades. I can see what they're saying doing that, but that's not me. I don't have the time to do that, and I'm not going to do that as well. And Patrick, you also mentioned, must your 200-day moving average be trending upward? Typically, yes, but with the other criteria I'm using, with the stock above the SMA 20 and commonly looking for the SMA 20, above the SMA 50, the 200 is usually trending in that. So even though I may not be using the uptrend 200, Patrick, which is a great thing to use, it's a good thing to use, it's a very common thing to use, a very classic thing to use that has been beneficial for investors for many decades and many years. It's not one of my direct criteria in the bull put credit spread searches. And I'll check that out later this weekend. I want to make sure. But yeah, looking for stocks above the SMA 20, that positive MACD cross. And a lot of times I will look for the days that the SMA 20 is above the SMA 50, at least 1 or 2. I might add that into my personal search. That almost dictates that the 200 is going to be in the uptrend. Not all the time. Not all the time, because a sudden earnings burst, as you mentioned, could put something directly into positive MACD cross, stock above the SMA 20, and the 20 crossing the 50 with just a sudden burst from 2 or 3 days ago when actually it's below the SMA 200. That's true. So it's not something I've used. It's not something I've checked, but I'm gonna look into that. Let me jot that down here using my BP with SMA 200 positive. All right. And Patrick, you said they use 1, 5, and 15-minute charts. They trade on opens using a pattern during the first 5 minutes, and that is not something that I've been successful with. Maybe I'm looking at it wrong, but honestly, when I tried to use that day trading approach, the zero data expiration approach, not day trading approach, zero data expiration approach for just standard vertical spreads, bullish or bearish, iron condors, trying to find a way I didn't find the success rate I wanted with the 0 days to expiration.